let's get to the weekly options alert with Knuckman of Agora Financial. And I want to start with your market commentary.
Sideways stocks. We're not going down. We're not going up. People are a little bit nervous for whatever reason, but we're just going sideways right now, and that's a pause, which often happens after the big major run that we just had.
Maybe investors are waiting to hear about this tax plan coming from the president. Let's take a look at your trade from last week first, because I want to talk about Twitter. A lot of news headlines out about Twitter, people using Twitter. Right. How is the stock performing?
Twitter's in trouble. It can't stay above 17, so we were looking forward to have another pop. Not yet so far. Still got a couple days left. It expires on Friday.
You have an options expiration on Friday. All right, your WPI trade trigger is what for this week's weekly options alert?
Mosaic. Fertilizer feeds the world, just to let you know.
That's true.
Nitrogen, potash, I guess is the way you say it, very important to agriculture. Now this particular sector, in the ag sector, has been beaten down badly. So we're now forming a base, and we're seeing smart money pour in and saying there's a bottom in this Mosaic stock. It's been trading between 20 and 24 now for the last 2 months, and it's been down 30% so far year to date.
Let's break down that trade.
Yeah, so I'm looking at a $20 call. We talked about the bottom. That's the lowest it's been in more than a decade. A $20 call for October 6th, so it expires not Friday, but Friday next. And looking forward to get a pop up to the halfway point of the sideways range to 22.
So you're buying or selling this call?
Buying a call, in the money call that's going to pay off well if and when Mosaic pops up.
Oh, I hope it does. Let's take a look at your trading floor takeaways. Number one, stock stall.
Yeah, it's a stall. It's not a fall. I know everybody, for whatever reason, just feels like they're exaggerating this recent pullback. If you look at some of these big name stocks, Facebook went from 175 down to 162. You had Apple go from 165 down to 150. Google's dropped from 1,000 down to 925. But these guys were up more than 30-40% for the year.
The FANGs.
Yeah, so it's not over by any means. If you look at the tech sector in general, it's trading in a range between 5,800 and 6,000. That targets 6,200, which is 5 full percent above. And every time we've sold off, it's bounced back the distance of sell-off on top of those old highs. And I think the market in general is going to make another push, and I'll talk about that in a second.
Next on your list, a golden opportunity.
Exactly. The metals and miners, they've pulled back. All right, we've seen gold come all the way back down to $1,300 an ounce. It had traded between $1,200 and $1,300 for all of 2017, had a big rally, a big boost, but it's dropped $75 in just the last 3 weeks. This is a long-term opportunity. There are a lot of things that can happen in the world to give gold a kick to the upside here, and that particular sector has been lagging behind, so it starts to play ball, everybody wins.
Last on your list, the crude climb.
Yeah, crude oil straight up in September. I don't know if people have realized this, but crude oil has gone from 47 to 52, highest level we've seen since April, absolutely straight up, and I guess it's only 3 weeks now, right? So crude oil, the energy sector has been left behind. If you look at XLE, the energy ETF, it's down 10% year to date, even though it's up almost 10% just in the last month. So it still has some room to grow. A rubber band snapback in energy and metals, and in these FANG stocks, boom goes the market up to new highs.
Pump it up.
Yes.
Thanks for coming on the show.